How much inheritance tax will you have to pay when you sadly leave this earth? Check out this video as I go through some of the details. Hi everyone, my name is Simon Misiewicz. I'm here to help you build your wealth whilst reducing your tax liability. And in this video, we're going to be talking about inheritance tax and how much you have to pay. It is worth you looking at some of the government pages, which are linked just below this video for you, and these will tell you in bits more detail more about inheritance tax in regards to general bans. And the other site that I recommend you looking at as well is the nil rate band that is relevant to your home, because you get two bands. You get the IHT lifetime allowance band and you get the nil rate band for your home. I'll explain that a little more. In this example, you may have a couple, so husband and wife or civil partners, and you have an IHT free band. So if you're in the UK, you have this IHT band of £325,000 per person, which basically means that you can have as much net asset up to that value without paying inheritance tax. And if you're a couple, that just doubles up. So you could be in a position whereby your net assets is going to be £650,000 and you would not pay inheritance tax at all. Net assets, just for anyone who's listening in, not quite sure of the terminology here, you could have a home that's worth £1 million. You could have a mortgage of £500,000. So that means that the net assets of that home is £500,000. Now you do have a home nil rate band, or NRB for short. Basically the nil rate band has the £175,000. So it is going up. This is now the value as of the 2021 valuation, so that's really important to note. It was less previous years, but this is the latest one. And going forwards in 21-22, the level will increase with CPI, and that will be announced in the budget announcement in the year 2021. So you can have this nil rate band. So basically, if you have a home that has £175,000 worth of value, or as a couple, you have a home that's net worth is £350,000, then indeed you could have that as a band as well. So in this regard, it is possible to have assets of £1 million, and net assets, please note, that would be free from inheritance tax. So that's not a bad thing, is it? Well, let's go through some other things that you may not be aware of in terms of free from inheritance tax. Firstly, there's the business-related activity. So if you're watching this and you have things like buy-to-let investments or paintings or something like that, those things will be called investments. They will be a part of your inheritance tax calculation. However, if you are a trade business, so you could be a management consultancy firm, you could be a property developer, you might have your own private GP practice, you may have all of these things, which basically means that these are trade activities. And there is something called business rollover, business asset rollover. There are different terminologies, but basically there are ways to say that these type of business activities should not be subject to inheritance tax. And we've also got gifts within 7 years. So if you gift one of your assets over to your children and you survive within the 7-year period, there's no inheritance tax. You do need to bear in mind though, if you gift an asset to your children and you die within the kind of year 3, year 4, year 5, then there will be a clawback from inheritance tax and you get a deduction. A little bit more complex than I really want to go in this video, but please do be aware of it. And there are allowances for agriculture as well. I doubt many people will be watching this video thinking I have an agricultural business, and most farmers I doubt will be watching YouTube. They're far too busy. So I will leave that aside. Again, there are reliefs that you can get as an agricultural business. Let's take a look at then of an example. So as I mentioned, you've got assets in the first column there, you've got IHT free, and then you've got IHT chargeable. So if you have a home as a couple of £600,000, I did say that you have an IHT free band of £350,000, which is the NRB, which basically means that you've got £250,000, which would then be chargeable to inheritance tax. So we do need to think about that. We've got buy-to-let property portfolio. Again, this £750,000 would be the gross value less the debt on those assets, leaving £750,000. And you do have this IHT free band, don't forget, of £650,000 for the couple, which basically means you've got £100,000, which would then be subject to IHT. You've got this shop that sells gifts of £500,000. So if you have a shop, remember the business activity and the premises contained within would be free from IHT because you can pass those over to your children and there's nothing to pay on that. So IHT is the £500,000. But you're looking at this thinking, well, didn't you just tell me that it's just £1 million? Well, I did, and you're right. But what I also said is that business assets in this degree would be also free. So in this regard, this assets of 1.8 million or 1.5 million is only got a £350,000 worth of assets that is subject to IHT, which is great news for this couple. Now, when you look at that, you have got this 40% IHT bill, which is therefore £140,000, which has to be paid over a period of time. There are ways of negotiating that. So buy-to-let property investments, for instance, you could negotiate with HMRC to extend that time period of when IHT has to be paid. Before I finish off this video though, it is worth mentioning that there are options to minimise IHT for this couple that has an inheritance tax charge. The first thing is to gift some of their assets. So if they have some buy-to-let property investments, could they indeed gift one or two of those properties, which would then hopefully take them out of the IHT charge. They do remember that they do need to survive for 7 years, so that's one thing they need to bear in mind. You could raise debt. One of the things that this couple may have is a lot of unencumbered buy-to-let properties. Well, why not raise debt against those buy-to-let properties, and therefore the net asset value of those assets is going to be decreased, and as such, so is the IHT liability. And the third example is convert buy-to-lets into trade assets. Now, what I mean by that is I'm not thinking here about taking a buy-to-let investment and then convert it into a holiday let, because there has been case law that prevents that kind of thing going. I'm thinking about taking this buy-to-let property investment here and then make it into a property development company instead. So converting properties from commercial to residential, selling them on, would be deemed to be a commercial business activity and therefore will be a trade and not subject to IHT. So hopefully those are good options of ways in which you can minimise the IHT charge.